Welcome to the Daily Update, where I'll go over the action in the market for Thursday, November 2nd, and then we'll see how things look for Friday, November 3rd. We had a pretty significant up day. In fact, things are starting to switch back more positive. There are some warning signs, just like there always are, things that we need to look out for that, especially with growth, it's not really participating. That's kind of the negative side. On the positive side, it was a broad-based bounce, not just the big stocks that took part in this. It was pretty much across the entire market, and it is switching a lot of our indicators back more positive. One thing that I need to explain before I get into the video, for the last couple of days, I've been having a real difficult time uploading the videos to Rumble. In fact, as I record this, the video for yesterday hasn't even completed going through its process of being able to be watched. Although I am seeing that people are viewing the video, I tried to upload a second one, and that one just kind of went off into cyberspace somewhere. So if you do watch the videos on Rumble and you just can't see the latest video, please, if you don't mind, jump over to YouTube and watch it there. I don't know how to handle this. This seems to come and go. I go through periods of time and then it just kind of goes away. And who knows, by the time you're seeing this, maybe the situation is resolved, but it has gone by for the last few days. And so I just wanted to make you aware of that. I'm trying to post a Rumble. They're just not getting there in their full form. All right, let's go back and talk about what happened. We really gapped up at the open. We gapped higher above R1 at 42.56 and R2 at 42.75. As the day went on, and you look at the chart, and I'll go through this, we pretty much set the high and then drifted up after that. There wasn't a lot of selling that came in. And we closed pretty much at the high for the day and just under the August 2022 high. Now that had been providing support. We broke down below it. Now we're starting to come back up to it. If we see more follow through to the upside, this has now become resistance, and we want to be able to get above that and close above it. So we were up 1.89% on above average volume. Volume has been rather healthy now, and our technicals were switching back more positive. I'll go through some concerning parts, because when we're going up, that's what I do. I look for, okay, what should we be concerned about? When we're going down, okay, what can we be positive about? It's to try to cover all the different bases at the same time. It's about inflation and interest rates, and kind of the day after the market was able to digest what Chairperson Powell said, and they liked that and just kept things going. Plus, pretty much across the globe, things ended up being positive. We are just keeping an eye on what's happening in Israel. And yes, that is escalating. Yes, it is continuing to go on. And I don't know if it's going to end up dropping out of the pop news cycle. It's still going to keep going on. You notice how you're not really hearing much about Russia, Ukraine right now. That's still happening too, but it's not what everybody is kind of focused on, which is how the news tends to work. All right. Let's go back and make some comments. We did close above the 200-day moving average. That's positive. That's the line in the sand between positive and negative. And now we're back above that. And it calculated at about 42.44. It recalculates every day. And we were able to get above 4,300. It was just yesterday that we were able to climb back above 4,200. Now we're kind of inching our way back up. It was a broad-based rally, and the growth areas did lag. I'll show you some of the charts. And the Bank of England decided to keep their rates unchanged. They're currently at 5.25%. Oil actually went up a little bit, but didn't seem to have much of an impact at 82.46. And we already have, believe it or not, some short-term extreme positive readings. The Stochc RSI, which is a very touchy short-term indicator, it's already extreme positive. The force index, and then the rate of change going back 5 periods. And then we're switching over. I couldn't believe this. I had to change the B or the S to a B right over here. And some of the things that were extreme negative have now switched over and are looking more extreme positive. All right, we have the CMB composite. That is getting extreme. The Connors RSI, and we don't get an awful lot of readings from that, at least extreme readings. The PMO studies, as well as the S&P 500 McClellan oscillator, and I have charts to show you this. We're still basically going through the same scenario. What I've added here is that if the Fed will raise rates or not. And now they're starting to think, well, maybe they won't, because some of the economic reports coming out are not necessarily stronger than expected. So we're going to get a big one in Friday's session with the employment situation report, and we'll see if this party can continue or if it's going to see some rain clouds come into it. We're watching Israel, we're watching oil, and then earnings are also a big impetus right now for the market. The dollar was up, which didn't seem to provide some headwinds. What did help is that interest rates were down. And then the yield curves were the ones that aren't as popular, the 30 to the 5 and the 10 to the 5. They're still back to being normal. The other ones, the 10 to the 2-year and the 10 to the 3-month, these are the ones the market tends to focus on. They still remain inverted. Sentiment did tick up. You'd think on such a powerful up day that sentiment would have jumped more than it did, other than just 1 point up to 33 from 32. But that's the way it goes. Our trend now, we are negative, but I noticed I have this in italics because the green line and the red line are just getting ready to cross each other. If we have a flat to slightly up day, and what I'm saying also is if we don't have a big down day after the employment report comes out, this is probably going to cross over positive, and we're above 20. And so that would mean that the trend would then default to positive. The ADX is weakening as these lines are coming back to each other, but it has crossed below its moving average slightly, but they're still above 20. So this is kind of that change point for our trend indicators. If you rely heavily on those, which I do, the bias is positive, and I've changed our momentum to positive because we've had a number of up days now with things really showing some improvement. The economic reports that came out, we had weekly jobless claims. They actually ticked up to 217,000. They had expected 214,000. Last time it was 212,000. So we're seeing a little bit of increase here, and the market kind of liked that, at least from not too hot economic stance anyway. Continuing claims also ticking up slightly to 1.818 million from the 1.783 million that we saw last week. Productivity, the preliminary reading came in at 4.7%. Okay, companies are producing things. They like that. And this was a lot higher than expected at the 3.6%, which is what we had last time. The cost, this is also what the market liked. It's falling down. Companies are producing more, but it's costing them less to produce it. It was down 0.8%. They expected it to be up 1.5%. Last time it was up 3.2%. Factory orders were up a lot more than they had expected at 2.8%. They expected 1%. Last time it was 1%. Here are the weekly jobless claims. And for quite a while, we've been seeing the 4-week moving average, which is the blue line, going down. Now it's starting to turn and go back up. They're still very low. When we're in the 200,000 range, it doesn't mean that the initial claims are that big of a problem, but we are starting to see a shift in the trend. Continuing claims also had been declining. Now they're starting to trend back higher, suggesting that maybe the employment arena is getting a little bit weaker. And here's the combined chart where we'll get the black line, which is the unemployment rate. That'll be updated on Friday. But the red area are the initial claims where they had been declining and now starting to go back up. The blue is the continuing claims where they were declining, and now it's a little more pronounced with how they're going up. And then we'll have to see how the unemployment rate ends up being reported. The productivity and labor costs, this is kind of all together on one chart. The productivity is the blue line, and it's going up, where the labor costs here are pretty much flattening out. And that's kind of healthy from a company standpoint. It probably sucks if you're an employee, but we're dealing with stock prices here as shareholders. And then looking at factory orders, after coming down and actually going negative, they are starting to go back up. The durable goods also showing some improvement. The non-durable goods, when you take out aircraft, they were pretty much flat. And then we're dropping now with the 10-year yield. We're down to 4.67%, but we're still above that 4.02%, which is potentially causing some problems with company earnings. Here's the intraday chart. And what I was trying to describe, that this, to me, this looks like, okay, we saw an initial spike up, and then this is like smoke drifting off for the rest of the day. It's like looking at a factory smokestack or something, but we got up above R2. And then we didn't see an awful lot of gyration here. We just pretty much went sideways, and then we just kept going higher and higher and higher, not quite up to the August 2022 high, but we actually opened and were able to stay above the 200-day simple moving average. But this is part of the concern, okay? Growth and value, they were both up, but look at how the red line is outperforming the blue line, which the blue line is growth. Also, looking at the S&P growth to value ratio, it was an up day. This is pretty much going sideways. A little bit of a concern. This can always change. The smart money, a lot of money can start coming back into growth stocks if they have more confidence in them. But on such a solid update, to see this pretty much go sideways is a bit of a concern. And also with our growth to value ratio for the S&P, it just barely ticked back up after it had been trying to break out and has been coming back down. Just something to be aware of. Looking at discretionary, yeah, it had a pretty good day, but it's still working off of a recent death cross. We did see a little bit of a spike up with the staples, and our ratio is turning back up after it had been declining. Here's where we're starting to see the changes. The ADX, our trend, the red line is coming down. It's still just barely above the green line if you look at the numbers over here on the left. And the ADX is dropping below the moving average. That suggests a weakening trend. But it still suggests that we're in a trend because we're still above 20. If the green line, if we have another good up day on Friday, the green line shoots above the red line and the red line goes down, that could easily switch us over to a positive trending environment. And we're seeing it a little more pronounced here on the short-term chart, dropping below the moving average, the red line and the green line. It's like they're kissing right now. And we'll need Friday's session to kind of work this out. We're also starting to drop as far as the VIX is concerned. Maybe we're coming into this next part of November where this historically has started to come down. The Ulcer Index still continues to go up, even though it's not going up as strong as it was. And we are declining with the VIX when we look at the line chart as well as the bar chart. Looking at the volatility, also starting to decrease as stocks are going up. But we're still going up with the VIX to VVIX ratio. This is longer term. It's going to take a number of days for this to turn and start to go down. As long as it's still going up, that's still a warning sign. And also with our VIX to 3-month average of the VIX, the red line is continuing to go up. It's going to take some time to reverse this if we are in fact switching to a more positive environment. We're also seeing the VIX to move ratio decline as stocks have been going up. The equity put call ratio, this is continuing to go down. That's positive. We finally topped out at about 0.79, and now we're starting to fall. As long as this continues to fall, that will remain positive for the market. Longer term, though, we're still going up with our 253 period simple moving average. Longer term, for things to turn more positive, we want to see this turn and start to come down. We are really falling with this fear gauge, and we're also declining with the other fear gauge that we follow. This is another warning sign. We had a pretty significant up day, and we just saw a little bit of a tick when we look at our risk on versus risk off ratio. Longer term, this is continuing to be in a downtrend. This is going to need to improve for things to stay more positive. And then we had the latest reading of the American Association of Individual Investors. Now, remember, this is a week old, and we were down a week ago, and so they reacted to that and not necessarily giving us an extreme reading. And if we're up on Friday, this is going to shoot all the way up because they tend to react. And remember, this is us. These are individual investors who tend to react to things instead of seeing things before they happen. Looking at our advanced decline line, which was a mystery chart yesterday, it didn't show up. We're showing some improvement with price starting to go back above the moving average with the advanced decline line. We're still below the moving average based on volume, but we are showing some improvement. And we're seeing a little bit of an expansion of new highs and a little bit of a contraction of new lows. We're starting to turn back up with our 5 period, and we're flattening and turning back up slightly with our 10 period. Looking more positive in the short term. The blue line is back above 0 with our advanced decline ratio. We're just a little above the 0 line with the red line. Yeah, the 0 line with the red line here. So this is turning more positive. Accumulation distribution also showing some improvement. And this tries to measure what is the smart money doing. The fact that we were able to get above this moving average, that's positive. The chicken money flow is also showing some improvement, another smart money indicator that we use. And looking at our daily chart, we're still underneath the 50-day moving average. And this does look pretty powerful. We were able to get back above the 200-day simple moving average on above average volume. And volume has been picking up nicely, just showing that there is some conviction behind what's going on, whether it is up or down. Seeing this little gap here, that might produce a bit of a concern. The charts generally don't like gaps, and we're wondering if we start to go back up, are we going to start hitting this other gap that we hit back in September? But we'll just kind of deal with that if it ends up developing. Here is the force index where it really shot up. It's on the, just a few days ago, it was at the lower Keltner band. Now it's at the upper Keltner band and is actually exceeding that. The Stochc RSI is already extreme positive. The Williams percent are, and the two CCI charts, they're showing a lot of improvement, but they're not extreme yet. So I'm not showing those here. In the short term with our stochastics, we're turning positive. We're just about at the midpoint with the intermediate term, and we're no longer extreme negative with our long-term stochastics. The Erin, it's just flatlined. It's like, what? Something happened? Oh, maybe I'll react to it when it doesn't make any sense. All right, here's our 20-period double and triple exponential moving averages. We're starting to turn back up with both the green line and the blue line, and we're getting back above both of these. That's positive. Looking at our regular 20-period moving average study, we were able to get above the simple and exponential moving average. The longer we can stay above this and eventually see the blue line go above the red line, that will be more positive in the short term. We just sliced on through our 20-day simple moving average of the open, high, low, close. We were wondering if the low here was providing overhead resistance. Well, we opened right about at the midpoint and we're able to close above that. If we can stay above this and turn the rainbow back up, that will turn things more positive. We saw some real improvement with our cumulative NYSE advanced decline line. We shot back above the moving average, also seeing some improvement with our regular advanced decline line. We're still negative here. We have a death cross with the other NYSE advanced decline line, but we did tick back up here. We want to see some more follow through with this. And this is what we've been kind of watching, is the Swenlin trading oscillator. It's been positive for a number of days and showing some improvement. Well, it just kind of kicked off in Thursday's session, and it's continuing to go up based on price and volume, and has now turned positive since they're both above zero. We're still in the more lighter shade of purple, you know, that song that was so popular. Actually, it's wider shade of pale, but this is showing some improvement. Now, be aware, these can redraw at some point as it gets more information and change colors when you're not expecting it. The TTM squeeze is showing some improvement. It's going from the dark red over to a lighter red and is starting to come back up. We are right at the midpoint with the balance of power, where we had been more decidedly negative, showing some improvement with our highest high and lowest low values, but not enough to really turn the midpoint up yet. We want to see more follow through with this. And we're just a little bit back above the 200-day simple moving average now. And we're bouncing up from this retracement that we saw from the July 31st high down to the low that we set a few days ago, and maybe starting to bounce back up now. CMB composite index, I use this like an oscillator. We're starting to get extreme positive. And the Connors RSI, we don't get a lot of extreme readings here, but we're getting one right now, showing that maybe we've gone up a little too far too fast. The 50-period double and triple exponential moving average study, we were able to close above both the blue line and the red line. The longer we can stay above this, the more we will turn up. And eventually, if the red line can cross above the blue line, that will be more positive. Our 50-period moving average study, we closed right at the exponential moving average. So right now, that's can be seen as providing overhead resistance. Our 100-period moving average study, we're just a little bit below the exponential moving average here, but showing some improvement. And we're coming up into this spaghetti mess of all the different moving averages. That's why I'm showing individual charts, because this can get pretty crazy pretty fast. And the vortex is showing improvement here, but the red line is still on top, even though it's declining. The green line is showing an improvement as well, even though it's on the bottom, but it is going back up. The Coppet curve is slowly starting to turn back up, but is still negative, showing improvement with the ease of movement. And this is another pretty big thing now. We're wondering, can we trust it this time? We had another buy signal when we crossed back above 30, only to see it fizzle out and then drop down. We're back above 30 now with the bullish percent index for the S&P 500. That is generally considered a pretty major buy signal. But we were fooled before. All right, and we're starting to get extreme positive with the S&P McClellan oscillator. We're getting above this level. Now, it could still go up if we have more positive price action, but this is just that area where we want to keep an eye on it. We're turning up based on price as well as volume with the summation index. We're looking a lot more positive with the NYSE McClellan oscillator, and we're not necessarily extreme. We're turning back up based on price and volume with the NYSE summation index. And we're keeping more of a positive flare here with the Elder's Impulse system for the S&P. And our RSIs, which had become almost extreme negative, now they're both crossing back above 50. So that's turning more positive. On-balance volume is still below a declining moving average, but is bouncing back up. If it can get back above this, that will look better. We're seeing some improvement with our 200-day moving average study as well as our 50-day moving average study. And we're coming right back up to this previous high. We're just a little bit below it right now, this 100% retracement level. And we'll see if that gets dealt with in Friday's session. Here's the longer-term fib chart coming up to the 61.8% retracement level. We're actually just a little bit above it right now. Please be warned. I put these numbers on here, and anytime I go in and adjust these charts, the numbers turn drastically different. These are not drawn by a computer. It's me just eyeballing things. The longer-term fib chart, we're back above this double fib level, and that's turning things more positive as well. And we're above this quadrant level. We were able to get back above this and close above it. That's turning more positive. We're showing a lot of improvement as far as momentum, starting to turn up and just barely positive with the PMO. We've already crossed positive based on price and volume. And we're starting to get extreme positive already with the PMOs that are rising. The buy signals are showing an improvement, and we're no longer extreme and showing some improvement with the PMOs above zero. After giving us just barely a reading under 30, the NYSE bullish percent index is now going back up. So this is a confirmation of a bullish percent index buy signal. And we just didn't quite get down to this 30 level with the NASDAQ 100 bullish percent index, but it was really close, and it's showing a lot of improvements. So we're seeing more across the board buy signals when it comes to the bullish percent index. Now that can always change, but it gives us a little more confidence knowing that we're seeing this more across the board. The slope oscillator is turning back up, but is still negative, where the MACD has already crossed back above its moving average. So we're getting kind of a mix here. The slope is improving. We've already turned positive with the TSI and the MACD. We're just barely positive with the PMO, and the PPO is starting to turn back positive, but our longer-term oscillators are flattening out and have not crossed back over positive, at least yet. We're still well above this anchored moving average going back to the all-time high. In fact, if we stay up in this area, I'll probably stop showing this chart for a while. And we've crossed the midpoint with our standard deviations chart. We're above the +1 standard deviation and actually entering into the +2 area. The chicken oscillator, after giving us an extreme negative reading, is now roared back above the midpoint and has actually turned positive. The money flow is showing improvement, but still below 50. So that's slightly negative. The ultimate oscillator, though, has been able to cross back above 50. That's positive. And here's a big one. The parabolic SAR now has a dot underneath. And to me, this is a pretty significant signal. And we're not really recapturing anything yet on our trendline study. We got the blue line back. We got the green line back. And we're kind of in no man's land to see if we're going to go back up to this other trend line at some point. But this is negative. We're seeing the daily special K chart continue to be below the red line, and that's longer term negative. We did see an improvement with the Dow, the transports, and the utilities, but the transports continue to underperform the Dow. And when we look at our ratio between the transports and the S&P, it actually went down. So this is another kind of thing to be concerned about. If this was really going up, that would give us more confidence in the rise in the S&P. But since it's really going down, that's a warning sign. We'll have to look to see if that can improve. And the Dow continues to outperform the transports, even though this ticked down. That's another warning sign to be aware of. And we haven't switched back yet, but please remember that there's a one-day lag with the Zohorchek method. This is, Wednesday's close, and then we're going to get it for Thursday. So yeah, this is we don't know if this is going to show some improvement, but we'll see if that ends up happening. This is also another concern. The Staples to S&P 500 ratio continues to decline. In a positive environment, we want to see this going up. Is that right? I got that wrong. This is turning back more positive. This is declining, and that's what we want to see. Please forgive me for that mistake, because I get it mixed up with this one, with the S&P to utilities ratio. It continues to decline, and we want to see this going up. That is more negative. Okay, so the staples are turning back more positive, where the utilities are still remaining more negative in reference to the S&P. This is also kind of interesting here. We have the 10-day average of the highs minus the lows for the S&P. We're still extreme negative. This is longer term. It's going to take some time for this to calculate, but we've had a couple of days now where we've been extreme negative here. We'll see if that can start to show some improvement. We're showing some improvement with our advanced decline ratio, where we're going above the 0 point based on price and volume. That's a good thing. And we're still above the 52-week low that we set for the micro caps, but we're still not far away from it. Showing a lot of improvement with the Heiken Ashi chart. The Kagi chart has turned positive. The Renko chart has turned positive, and the 3-line break is turning positive. We also saw some new X's drawn in here with the point and figure chart. X's mean we've gone up. O's mean we've gone down. We have a new signal called a low pole reversal. Sounds like something you would pay to watch. I don't know. But this is looking a little bit more positive. And we're seeing some improvement with the equal weight. It was more of a broad-based participation here, as well as the weighted S&P 500. But it's still, the equal weight is still underperforming. And this is hanging in there for right now. Again, you could look at this either positive or negative. The ratio is going up. That means the mega caps are outperforming. But the fact that we had a really solid update and this actually came down a little bit, that means there's more broad participation. And the Dow is coming right back up and closed barely above its 200-day moving average. Can it get above this and prevent this death cross from happening? And the Elder's Impulse system for the diamonds remains positive with a green bar. We're right at the 50-day moving average for the NASDAQ 100. That is now providing overhead resistance. This is a level I'm going to be watching in Friday's session. But the Elder's Impulse system for the Qs remains positive with a green bar. We're turning back more positive with momentum based on the NASDAQ 100. We're still below 0, but we're crossing above the moving average. And we're back above the 61.8% retracement level for right now. And we're showing some improvement with the NASDAQ. We're still underneath the 50-day moving average, but we are above this pivot level. And so things are looking a bit better. And we're still underneath this 50% retracement level. Actually, we just closed above it. It's hard to see in there. And we jockeyed around this so much, it's not real clear. But we're just barely above the 50% retracement level for the NASDAQ. The small caps showing some improvement, but still working off of a recent death cross. Looking at the Russell, we're crossing back above 50 with the RSI. Still have a death cross. Turning positive as far as the momentum. Trying to recapture this support area that we lost earlier on. And we're turning back to positive with the Elder's Impulse system for the small caps. The mid caps also had a good day, closed above the pivot point, but still working off of a death cross, turning back and looking positive with the Elder's Impulse system for the mid caps. The FANG index has come right up to its 50-day moving average and was not able to close above that, but it is showing some improvement. You can see we've seen this little stair step higher here, and longer term, we're still in an uptrend. We were able to recapture these intraday lows and start to move back up with the FANG index. ARC did have a good day. It was up 8.41%, but it's still below its 200-day moving average and still produced a recent death cross. And we're coming right back up and closing on the trend line here with our arithmetic scale going back to 2009. This is where we're not seeing an awful lot of strength. The Qs to the S&P, yeah, they were up, but just kinda. And discretionary, yeah, it was up a little bit, but just back up to a declining moving average. Large cap growth just kind of barely budged when we compare it to large cap value. So large caps, a little bit of improvement. We actually declined with the mid caps and the small caps. That's a bit of a concern, just to be aware of. It can change, but it also can grow bigger and be more of a problem. Our 50-period new highs, new lows study is ticking up just a little bit because for the first time in a long time, the black line actually closed above zero. Now it's going to take some time for this red line to turn back up. We need this to stay above zero and continue to advance to turn it more positive. Our 50-period moving average study, after giving us an extreme negative reading, improving, coming back down, now it's starting to show some more improvement, but it has not crossed back above 50. That's kind of the dividing line here. And with the mid caps, we're seeing some improvement as well. And the small caps are also showing some improvement. And here's our broad range of new highs, new lows with a 5-period moving average. After giving us a pretty extreme reading, we are showing some improvement, but we're still well below zero. The dollar continues to be up and is still in an uptrend. The financial sector had a good day, but is stalling out right at its 200-day moving average after giving us a recent death cross. But this support level continues to hold. We came down to it and bounced up off of that. Can that continue? Are we going to continue to go up from here? If things turn back more negative, are we going to fall down below this resistance level? And here's where the market really got some strength, was the decline in the 10-year yield. We really dropped. Just a few days ago, we're dealing with 5%. Now we're down around the 4.6 to 4.7 area. And looking at price, we are seeing some improvement with the RSI going above 50, still a recent death cross. Shorter term with the momentum, we are positive, coming back up to its 50-day moving average. Yeah, I think that's the 50. It's blocked out there. The 30 to the 5 is still back to being normal. The 10 to the 5 is also normal. Probably what I'm going to do after this video, as long as these stay normal, I'm just going to take them out. I'll only add them back if they go back to being crazy again. The 10 to the 2-year is showing a little bit of a decline here, but overall it has been coming back closer to the zero line. And the 10 to the 3-month also declined a bit, but is still inverted, but showing some improvement. And we're still seeing a very strong correlation when we look at the 10-year yield, subtract the German 10-year yield. It declined a bit. The dollar is kind of stalling out a little bit, even though it was up, but it was down yesterday. The correlation is still really strong, which could be negative for stocks. If this starts to go down and the correlation stays high, that might be more positive for stocks. I don't have the latest research from Tom Bowley for November. I just have to wait until that email comes. So our outlook, we're still dealing with earnings season. We're still dealing with the situation in Israel, which could get worse, could get better. We're just kind of seeing how all that plays out. We are still basically negative with our technicals, but we are in the process of turning positive. We will get the employment situation report. That's the biggie for the month. We'll also get the final reading of the S&P Global Services PMI. Another big one is going to be the ISM non-manufacturing index, and then all the different geopolitical events that I've been alluding to here. Here's the last day for the economic calendar. For the next video, I'll come up with the calendar for next week. This is also positive. We have seasonality on the market side here for November 3rd. We're at 66.7 for the Dow, where we're at 61.9, both for the S&P and the NASDAQ. We will be on the 3rd trading day of the month. The green dashed line is during an election year. The other kind of really hard to see green line is somewhere in here, but that's also positive. And we're wondering if we're in this green area here now that we're in November that is turning more positive. Also, this seasonality chart suggests the same thing. When we look at the NASDAQ, also saying pretty much the same thing, and the S&P, the green line, showing the same thing. Bitcoin is kind of stalling out a little bit here. It got up into the 36 range, but right as I was looking at the chart, we've dropped down into the mid 34s. So it's trying to break out. It's trying to make everybody happy, but it keeps falling back as people are selling into strength right now. But we have seen a recent golden cross here with the moving averages. So our scenarios, yeah, we could still lean towards the down one, but our technicals are improving. And we could go more towards the up one now, but we haven't quite confirmed that yet. We're not going with the sideways one, at least for right now, because both of our ADX charts continue to be above 20, even though they're dropping below their moving averages. The warning signs, the daily special K chart continues to be negative. The longer-term equity put call ratio is going up. That's negative. The risk on posture, you'd think it would have kicked into gear more. Nah, it's still not looking all that great. We're switching over with our oscillators for the S&P and the NASDAQ 100. They are turning positive, but we're not seeing it across the board yet. The vortex is negative, but showing some improvement. The 50-period exponential moving average study is still negative. That's longer term. That's going to take a while to change. The Russell, the small cap, and the mid caps are still working off of recent death crosses. The financial sector came right up to its 200-day moving average after generating a death cross about a week ago. The positive signs, a little bit longer now. The 5-period equity put call ratio is now going down, and that's positive. The parabolic SAR chart and the BPI. The parabolic chart turning positive, that's pretty significant. And the BPI crossing back above 30, that is usually a buy signal. Small and mid-cap growth continues to be positive, even though we're chopping sideways. So our conclusion, we're negative, but in the process, potentially of turning positive. It's going to be, how does the market react to the economic reports coming out, and then anything geopolitical that may happen either before or in Friday's session. Right before I started recording, we weren't all that different as far as the futures are concerned, but this is about 6 hours before the market even opens. In the short term, we're negative, but we're in the process of turning positive, and we're actually showing some overbought conditions already. Intermediate term, we're in the process of potentially turning positive. We have turned positive now in the long term because we're above the 200-day simple moving average. Thank you. I really hope you found this helpful. I hope you have a really good day and enjoy the new Beatles song. It's probably the last one we're ever going to get. Thank goodness for AI helping that all to happen. And I will talk to you in the next video.